numbers. We had some inflation data. The initial response in the dollar was weaker, but the dollar has fought its way back, as you can see, this candle. We'll see if they could squeeze through this moving average or not. The relative strength after the numbers, the currency that hasn't given up anything really is the Aussie. And bought the Aussie last night, posted it in the room at 46, so it took 25 pips. This to me looks like we're going to get a little bull flag here. If we could start clearing 580, my target's up around 550. Looking at NOK, that worked from yesterday, took partials in this, and I think it could go to break-even stops in case the dollar does start to accelerate on this. Canada, we didn't miss anything, covering it on Friday on the spike at 37.11. Let's see if we could get some more downside follow through in Canada as Aussie moves up towards its target. Yen is still one way. We have finally achieved what, here's an example. Take it to heart that when you see confirmed highs, which was one of the major contingencies that had me thinking when we were pulling back towards 143 that this high would be attacked again because markets rarely peak when price and momentum confirm. So here we are. I didn't think we'd get here this fast. 150 was about all I was looking for. So this move could be getting a little long in the tooth here. We'll see what happens with the yields. They're down a little bit today. The 10-year giving up a little bit. I don't have as good a feel for the 10-year now, but it's still well above the moving averages. There's nothing saying that 445 is the end of this move in the 10-year, even though the yen is continuing to perform. TLT, I still think it's ugly. There's a lot of problems facing this bond market. Look at this rally compared to the last recovery we had last week, which I said looks like just a rally back to the breakdown. And here we've tried to hold, and we're getting a tail. And, the aggressive call up here to possibly make new lows in TLT is not looking quite as aggressive as it was at the time. I am attempting a S&P short. I did it at 63. The reasons being this divergence. Okay, so I actually took 9 handles because before the number we went from 63 to 62.91. So I took a piece off. It's in the room. I have a 35 handle stop from 63, so I'm gone if we take out 63.35. If we do get a correction going, the most natural place for it to go would be prior record highs, which were about 61.30. You could see some moving averages coming in here, and all that would be is a check of the breakout that finally occurred in the last 4 weeks once we made new all-time highs. So that's what I think is possible. We'll see what type of action we get there. Gold failing from its rally attempt yesterday is kind of looking like an ABC to me. And people are asking me where I would buy silver, and I said I'm going to wait for 2,900 in the gold. A lot of people are skeptical of that call of that we could even get back under 3,000, but here's your technical case. All right, so let's call this some type of continuation formation. Maybe it's a flag, maybe it isn't. But we had a move from, say, 34.60, 32.40, so call it 240. And we break 240 from 33, that's going to give you 30.50. So, in that neighborhood. Also, I believe what we had yesterday in silver was a wave 5 out of a wave 4 triangle, shows up a little bit better. Let me give you the big picture on the weekly. So we had an overthrow of the Megaphone line here, but you can see the weekly RSI never confirmed. Although I still think gold is the relative weakness because of what the gold silver ratio is. And How many of you out there remember me talking for weeks about selling the gold silver ratio up here? And that it wasn't even a risky thing to do to exchange some gold coins for more silver. And if you had a good dealer that was fair and straight with you on the spreads, this already has been about a 20% move. And we'll see if it could hold and react. But that was something up there a lot of people were not talking about, did not see it as an opportunity. And, let's go to WTI. Pretty negative day. Looks like it's a flag on the verge of breaking down. Breaking down. If we break down, we're going to make new lows there. Um, and I think that covers quite a bit. So we'll see. They're getting to euro now, and we're taking out that 65.50. So I'm out with a 20 pip loss now on that. And we'll see what the dollar has in it. Maybe I was premature coming out of this dollar position on Friday, but we'll see what happens with some of the other stuff that I have on. I still have a hard time getting real bearish in the euro right here because of this corrective action, and and even the pound is trying to dig in its heels, and Aussie trying to give it back. I'm protecting myself under 40, so I'm still not ready to proclaim that the dollar isn't going to have some type of correction. It's still my view that we could have a move back to 96 and a half or so in the coming days. But that's pretty powerful, this action that we're getting in gold. That's why metals are probably getting pressed, and maybe that's what's going to be behind some type of S&P decline. S&Ps are fading once again. So again, use stops, take partials. There were partials in everything except the euro. Never offered them to me, but the MEX did. And here's the MEX. I still think it has some life in it. It's trying to turn the corner. I think you could pull up your stop to under today's lows, but maybe MEX gets a lift during this round of dollar strength. And I still am looking for long dollar positions, but not yet, because I still think that there's going to be some type of pullback between 98 could give us a pullback to 96.50. So I'm going to stand pat for that. If this turns out to be a major breakout, I have enough confidence in my chart recognition skills to find another entry. It's not like we didn't participate. We were buying it when no one wanted it at 96, out at 730. So 50 on the table. Don't expect perfection at the crap table, or you'll live an agitated life. Don't say would have, could have, should have. The key word as a trader all the time is next. So everyone have a good day on Turnaround Tuesday. Let's see if we get some type of correction in the levitating S&P market for a week or so, coming back down to test the breakout. There's nothing wrong with cashing out of some silver positions. You have windfall profits, of course. You didn't get it yesterday, but if this is the end of wave 5, we could get a pretty good pullback to correct wave 5. So people have asked where would be a good pullback area to get long silver. And, this wave is most likely from here, 18. Okay. So this is wave 5, 18 to 38 is $20. Um, if we are correcting all of this, $8 could take you right back down to even the breakout, 31, 32. So I'd be patient here with silver. I think there are a lot of people long. You can see the weekly did not confirm, and even the daily really didn't confirm the high. I think it matched a prior RSI. just a little bit too much enthusiasm right now. I think they have to see this. They have to test some of the Johnny come latelys to the party. In fact, I saw a headline today: the bull market in silver has begun. Well, where were they here or back here? Begun? I think a better word would have been well underway. So that's what I see today. Check out what I'm posting and Mike's posting in the rooms, and I'll see you tomorrow, same time, same station. Remember, don't just count your pips, count your blessings.